Bring in Bob Greefield, former Nasdaq chairman and CEO. Bob, as we've just been talking about, it's been an incredible year for tech. But one of the points that keeps being brought up time and time again are these valuations. What camp are you in? Are they frothy? Is there a way to justify them? And what's ahead for 2021?
Well, first, Happy New Year. We're all very, very happy to see 2020 go into the rearview mirror. With respect to valuations, let me start kind of on the macro level. You have to understand that the business model of these companies that are going so much higher is fundamentally different than those stocks that led the market, say, 20, 30, 40 years ago. So back in the day, it would cost you a fair amount of money to make another widget. You have so many business models today where the incremental widget really is the cost of electricity that the server will consume. So they can really have phenomenal profit growth, even though the revenue growth in time will be somewhat muted. So when you think about that, you say, okay, those companies deserve a premium valuation. The other macro point I will make is when you have historically low interest rates, when we have the 10-year below 1%, you will have historically high PE ratios. So I think we see a perfect matching there. So those are two good things. I'd also, though, caution as we think about 2021, I think 2021 is going to be more a market of stocks. If you look at 2020, clearly, if you're in the stock market, you're better off in fixed income. If you're in Nasdaq, you're better off than in the S&P. And then we saw as the year progressed, if you were with the proper themes, either at home or cloud computing, you did even better yet. And that's the dominant theme here. I think as you look at 2021, it's going to be a little more granular, where you're going to have winners and losers, right, within those themes or within the market itself.
So Bob, if it's going to be more market of stocks, how much, does that tap into what we've seen this year, the huge rise of the retail investors? Does that mean that some of the winners keep winning next year?
Well, one, I think it's great that the retail investor is in the marketplace, right? We know that if retail investors are in the market over a long period of time, that will certainly contribute to household net worth, and certainly, I think, help lessen some income inequality we see in our society. That being said, we are concerned that retail investors, like anything else you do in life, have to execute that strategy of being in the market in a smart way. When Nasdaq is up 47%, then your odds are that you're going to do very well. So we're happy to see retail investors get in, when the market is incredibly strong, but certainly going forward in 2021 and beyond, it's important. And I think the infrastructure in the industry is prepared to do that, to educate and be discerning with respect to how you allocate an investment dollar.
Shepard Smith here. Thanks for watching CNBC on YouTube.